This is Bert Dohmen with the February 18th edition of Bert Dohmen's Chart Guru. Today we are going to discuss gold because it has been in the news quite a bit. Gold has had a drop that's been manipulated downward by the big gold bullion banks, and the mining stocks have absolutely been hammered. So let's take a look here. Here's the chart. The blue line is the GLD, which is the ETF for gold bullion itself. And here you can see that it has had actually about a 2-year sideways consolidation. It's getting very long in a tooth, but so far it has not broken this support, and this is critical support. It might get to it, and it has to hold. We might see a brief downward side penetration of that support just to let the last bulls chicken out, and then gold should be in a up move again. But right now it is in a precarious position, and it will certainly try the courage of the bulls. Now the other line here that we have is the red line, and that is the HUI, which is the gold bugs index. It's the gold miners who do not hedge their gold production in the futures market. And you can see here that it has really been hammered all the way down here to 374 from well over 600 on the index. And anyone who has been owning the gold mining stocks has felt that pain. You can see here this red support line is support that goes all the way back to the low of 2010. So this is now a very important area. We should be able to get a rally out of this, or at least a bounce, and that might be good for some traders, but don't load up on that bounce, because this low here will have to be retested, in our opinion. That's what normally would happen. So here we now have a situation where the gold has been much stronger than the mining stocks. Mining stocks, of course, are subject to a lot of different problems. One is political. All the mining companies that are doing business in the underdeveloped world, they're subject to the government exerting higher royalties on what they extract from the ground, because these countries naturally feel that these assets belong to the country. We also have higher taxes imposed, and then there are the typical mining risks of flooding, of the deposits being depleted, of higher mining costs such as electricity, the machinery that is required to mine, etc., and even strikes and revolutions. So mining stocks have a lot of problems which gold really doesn't have. And now the only benefit of having the mining stocks is that you do get dividends, and many of the companies are paying very nice dividends, and some of the companies have actually announced that they would raise or their dividends as the gold price rises. Of course, that is not a situation that we have right now. So there is both. And for gold investors, probably if we do get that breakdown of this line here sometime in April or so, or maybe even before that, you could do a little bit of buying. The big central banks of Russia and China have been huge buyers of gold. They know that the world financial situation is precarious, and that it will necessitate, therefore, huge artificial stimulation and money printing of the major central banks. And the more money they fabricate out of thin air, the less the money will be worth that we have in our bank accounts. So this is now Bert Dohmen signing off for today, Bert Dohmen's Chart Guru, and we will have another message probably by week end. So come back and visit us. Thank you very much.